Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, your market destination has turned 18. Hello and welcome to this market special. The show is filled with leading voices on the market, starting with veteran investor MADHU KELA, who is answering the question, is a correction around the corner? Here is his opinion.
Vis-a-vis market, and I'm always excited because I can see this bit of correction itself. There are still plenty of opportunities which are there in the markets, both in large cap and mid caps, and corrections like this actually definitely provide investors to capture that opportunity. So I still remain very positive. I think this correction in one sense was little overdue because we have not had a corrections since 7,800. We have not had 300-400 point corrections at any given point of time. So in that sense, this was overdue, and I'm glad that has happened.
Madhu, what would your first list of purchases be? Is it going to be your new favorite pharma?
I think it will be again. The selection is there are opportunities in the pharma, as well as I'm also excited to look at the infra companies, select banks, because I think even for banks we are maximum 2 to 3 quarters away from all the bad news which we have been getting, and I don't think the valuations and the prices are discounting any rosy pictures for the banks. So, and there are opportunities which are there even in select real estate stocks. So it's always, we have never been advocating any large sector per se, because I never believed just by saying that you buy this sector you make money. Ultimately you have to buy the best company in that sector. That is how you make money. So we are still looking at bottom up ideas which will come from the sectors which I mentioned.
Coming back to that earlier point you made about not seeing a big correction up until now in this market, I want to flip that over and ask you, what stage of the bull market do you think we are in at the moment? Is this a mature stage, or do you think that we're still in a very nascent, newborn stage of this long-term bull market?
I wouldn't say this is matured, Sonia, by any stretch. I think if you are talking of really 5-10 year perspective, we are still we are not at a very early stage, but we are certainly not at a mature stage. And I would say this bull market still have long legs and long way to go in terms of rewarding investors. And you see what is also happening because of the vibrancy in the market. You are also getting a lot of variety of companies to buy from. 3 years, 5 years back, you wanted to buy financials, you could only buy banks, either private sector banks or public sector banks. Today there are variety of choices to choose from, even if you are bullish on financial sector. So I think as the market goes up and as there is more acceptance from retail investors, and I must mention that a friend of mine was mentioning that the net flow of November could be as high as 25,000 crores net into mutual funds. This will be the highest ever inflow which mutual funds would have collected in any given month. So which means the point which I want to make, equities has always been considered as an asset class which is not broad-based and which is not an acceptable asset class. As I have worked for a mutual fund for 15-17 years, I think that trend has changed for last 2 years, and it is becoming more and more acceptable. People have been very skeptical about these domestic flows. It looks like 1 month. Now we have had 12-15 months of consistent flows, and they are rising. That gives me conviction that long time we have been advocating that there will be a time when domestic flows will be at an acceptable level and domestic investors will participate in equity story. I can see that happening for the last 12 months, and I hope that this continues.
Yeah, Madhu, that was my next question, because I remember 2 years back we discussed this, that this equity cult, maybe we're just at the beginning of that equity cult, and 18-20,000 crores, 25,000 crore a month are huge numbers. Madhu, the problem is this money hasn't seen any decent correction. So are you fairly confident that if for some reason, if maybe for political reasons or whatever, if we have a 15% correction, this money would stay put and we would see incremental money actually coming into stock markets?
Anuj, actually, I am quite confident that if there is a decent correction in the market, there are too many people waiting outside who have not been able to participate in the market. So in the first decent correction, you will see all those people who have this left out feeling, who felt market is too high and who have not been able to participate. You will see a lot more money coming in from the retail investors and from the HNI investors. If you are asking me if there was a 10% decline, all this money which came in, will it fly away? Will there be redemptions? I'm not in that camp. I don't think so.
Okay. Well, I was interested when you were answering Sonia. You spoke about the sectors you like. You said infrastructure, banks. Which is the safer sector to play? We have a lot of beleaguered companies in the infrastructure space. So would you pick and choose, those which still have good balance sheets?
I would call this, Lata, I would like to buy the bear market survivors because we have had an extremely challenging time in the last 7-8 years. And these bear market survivors you can find across caps. So there are a lot of small cap companies which have very good balance sheet. There are mid cap companies which have good balance sheet. There are large cap companies which have good balance sheet. So I wouldn't like to touch companies which are stressed or which have real balance sheet issue till the time it gets sorted out. And some of them are also getting sorted out through bank haircuts and HDRs and stuff like that. But till the time, I would like to play companies which have survived this bear market and can capture this opportunity. One sector which we did not touch, like if you see the road companies have been doing well, and there are still a lot of attractive plays even in that sector. So as I say again, it is not about saying that I like infrastructure. What you have to do is all over again, go back, do your bottom of work in some of these companies. Because I see that there will be massive order flows over the next 2-3 years in some of these companies. And a lot of the companies which were like in 2007-8, a lot of the companies have actually been so stressed that neither do have the balance sheet nor the capability to bid for these tenders. So not only there will be order flow, but there will also be margin improvement for some of these companies.
Well, that was MADHU KELA with his view on the market. We also caught up with Sunil Singhania of Reliance Capital, who says that while the market has seen negative surprises, it has always come back after a 3 to 4% correction.
Markets, are they looking toppish to you at all? Or should we expect this to be the first significant correction?
As far as the markets are concerned, yes, I think in the near term, we have seen some correction. There have been some concerns relating to fiscal deficit. There is some apprehension due to the upcoming state elections. But I think these kind of 3, 4, 5% corrections are always a part and parcel of the game. Having said that, I think our view over the medium and long term continues to be as optimistic as ever. And we would consider these corrections as, just a sort of a roadblock. Or a speed breaker over the journey which India has still to cover. So continue to be optimistic.
Okay, what about the Gujarat elections itself, Sunil? There are some opinion polls now giving the BJP even a minority and looking at a Congress government. If that were to happen, will that be a more than significant correction? What can the market dip to? What, 9.7, 9.6? What are you expecting?
So frankly, again, politics is a very funny game, and it can never be right. Having said that, the good thing is that the expectations have started to come down. And that is a positive because, if the expectations are low, then obviously the impact to that extent is very minimal. Having said that, we have seen in the last 3-4 years that there have been a lot of instances where there have been negative surprises and the markets have had a sharp correction, but only for a very short duration, whether you take the US elections, whether you take what happened with Brexit, whether you take some other events. So our view is that yes, in case there is a real surprise verdict, markets might get a little bit jittery in the near term. But I think over a longer term, market starts to look at how the economy is growing, how the corporate earnings are expected to grow. And I think on those both fronts, our view is that we are finally seeing an uptick happening, both in terms of the GDP growing a little bit faster and also corporate earnings coming back.
Sunil, in fact, just a while back, we were speaking with your good friend MADHU KELA, and he was telling us about his view on the capex cycle recovery, infrastructure, real estate. Those are sectors that he's betting on. Would you share his view?
So I think on the infrastructure side, we are finally seeing a lot of action on the ground. Earlier it was only announcements. I think finally we are seeing some large projects getting off the ground. We are all residing in Bombay, and we are seeing how the metro work is, going on full speed. We are also seeing a lot of action in other parts of the country as far as the road network is concerned. Even on the metro front, a lot of cities are, in the midst of implementation as far as the metro is concerned. A few cities have already seen the first phases being implemented, like Hyderabad, Jaipur, even partly Bangalore. On the airport front, we have seen Udan, being launched. Maybe after a year or so, you'll see at least 80, 90 new airports in the tier 2, tier 3 cities and towns being implemented. We are seeing a lot of action on the irrigation front. So finally, I think on the infrastructure front, there is a lot of action, and I would share that optimism. As far as real estate is concerned, yes, sales are slow. There have been massive long-term positive reforms like RERA which has taken place. So I think eventually that was again going to be a very clean sector to invest in. But I think in the near term, my preference would be more on the infrastructure space than the real estate space.
Sunil, it's been a pleasure knowing you for last many years. Your thoughts on PSU banks? Do you think this is a good space to buy right now?
So I would say that it makes sense to be, looking at the corporate banks at this point of time. I think we have seen the worst as far as the NPA creation is concerned. From here on, there are a few sectors which were in trouble, which have started to revive predominantly on the metal front. We are also seeing, a move from the government towards, coming out with a long-term solution as far as NPA resolution is concerned. And though the NCLT might have near-term challenges because it's the first year of implementation, I think finally it's going to be a great, move for the banks. In the near term, yes, there has been a short-term inch up as far as interest rates is concerned. There might be some pressure as far as near-term margins are concerned. But I think eventually corporate banks should be looked at, very optimistically in the near to medium term. Having said that, our preference in the PSU pack has been more the larger banks. Our view is that the smaller banks are losing their moat. It is going to be very tough for them to attract savings as well as fixed deposits. Preference again, as I said, is largely in the larger PSU banks. Specifically, the largest PSU banks has a lot of underlying assets which are growing quite rapidly, whether it's the insurance companies or the mutual fund or some of the other ancillary businesses. So I think within the PSU pack, maybe the larger banks should be more preferred.
Okay, well, when you turn 18, Sunil, you get a lot of advice from your teachers, your elders, your peers. And since we've turned 18 today, what would be the advice that you would give all the retail investors who are listening to you right now? Stock advice is more than welcome.
So I would say that, CNBC reflects the Indian economy. So the Indian economy is just about turned an adult. There is a long way to go for the Indian economy and the Indian markets. Have confidence. You have just turned 18. I think there is still a long, long life to go. So be optimistic, be positive. Don't worry about near-term events. I think all these near-term events have been great buying opportunities, and you'll make a lot of wealth.
All right, so those are two big views. We'll take a break right now, but on the other side, we will get you a conversation with another market veteran. Hear it out from Ashok Vadva when we come back.